You're not financially savvy. You're immature. Last year, you gave away something worth $46,000, and you celebrated it. Seneca saw this exact stupidity in ancient Rome. Here's what you lost. Seneca wrote, "It is not the man who has too little, but the man who craves more, that is poor." Translation? Your financial decisions are emotional, not logical. You say you're good with money, but you celebrated getting a $3,000 tax refund last year. That's not good with money. That's giving the government an interest-free loan for 12 months. You say you're financially responsible, but you gave away $150 in potential returns just to get a lump sum that was already yours. You call it responsibility? It's surrender. You say you needed the refund for expenses, but there's a system that puts that money in your hands every single month instead of once a year. You call it planning? It's hoping the government gives you back what's already yours. How many times have you celebrated a tax refund like it was free money? Every single year. And there's a number at the 7-minute mark that will end this delusion permanently. Let me prove it to you. $3,000 refund last year. The government held $250 of your dollars every single month. You didn't earn interest. They did. Here's what you prioritized. 15 minutes to understand your actual tax liability. No time. 30 minutes annually to optimize your withholding. Too complicated. 5 minutes to set up a system that keeps your money. I'll do it later. Meanwhile, you spend 2 hours daily on social media. That's 730 hours yearly scrolling while the government uses your money for free. You research vacations you can't afford. You compare yourself to friends who are also financially illiterate. And every April, you celebrate getting your own money back. Marcus Aurelius wrote, "If you are pained by any external thing, it is not this thing that disturbs you, but your own judgment about it." Your judgment is that a refund equals smart planning. You weren't taught this. That's not your fault. But continuing it, that's your responsibility. And that judgment is expensive. Very expensive. Here's what refund celebration does to your wealth. Weakness number 1, mental accounting. Paycheck money, you budget it carefully. Refund money, you blow it on vacation. Same dollars, different psychology. $3,000 on vacation, that's $14,000 over 20 years. You traded wealth for 7 days at a resort. Weakness number 2, present bias. Your brain treats April refund as real, but monthly compounding feels invisible. $250 monthly at 8%, $3,136 yearly. Your lump sum? $3,000 flat. Over 30 years, you lost $15,000 because invisible money doesn't feel real to you. Weakness number 3, loss aversion. The fear of owing $500 in April outweighs gaining $46,000 over 30 years. Your amygdala beats your logic every single time. Warren Buffett doesn't overpay taxes. Jeff Bezos doesn't overpay taxes. Ray Dalio doesn't overpay taxes. You know who celebrates refunds? People who will never build wealth. Stop. Remember that number I promised? $3,000 refund. Invested monthly at 8% over 30 years. $45,897. Your tax refund strategy just cost you $46,000. That's a house in some markets and years of freedom in every market. You gave it away for nothing. So what did billionaires figure out that you haven't? A system, not willpower. A system. The practice is called monthly tax true-up system. You calculate your actual annual tax liability. You adjust your withholding to match exactly. You deploy the difference immediately. Seneca paid exactly what he owed, not 1 denarius more. Naval Ravikant does the same. 0 refund, 0 owed. He said, your time and money compound. Don't let either sit idle. Why it works. When money never leaves your paycheck unnecessarily, your brain doesn't feel the pain of adjustment. You simply keep what's yours and deploy it strategically. Here's what happens when you do this. First, you open last year's tax return. You see the total tax owed. You divide by 12. That's your monthly target. Takes 3 minutes. Second, you log into your employer portal. You find the withholding form. You adjust it until the calculator shows 0 refund, 0 owed. Takes 8 minutes. Third, you set up automatic investment for the difference. $250 leaves your account the day your paycheck hits. You never see it. You never spend it. Takes 4 minutes, 15 minutes total, and you just fixed a problem that's been costing you for years. But here's the psychological trick. You set up the investment before you adjust withholding. That way, the money disappears before your brain can panic about having too much in your paycheck. You're not fighting your loss aversion, you're redirecting it. Then you calculate worst-case scenario. What if you owe $500 in April? You'll have $3,000 invested earning returns. You can pay the $500 and still be ahead $2,500. Your fear is irrational. Prove it to yourself with math. Week 1. You adjust your withholding. Your next paycheck is $250 higher. You feel strange. Is this legal? Yes, it's your money. You were just too lazy to claim it monthly. Week 2. The investment happens automatically. $250 disappears before you see it. Your brain can't spend what it doesn't see. You don't feel deprived. You feel in control. Week 3. You check your account. $750 already working. Your coworker still waiting for April. You're compounding. They're earning nothing. Week 4. Your coworker asked why your paycheck looks different. You explain. They say, but I like getting a refund. You realize they're repeating the same mistake you made for years. You weren't taught this, but now you're choosing it. They still don't know. You do. Month 3, you've invested $2,250. Your coworker is still waiting for April. You're already earning returns. They're earning nothing. You're not wealthy yet, but you're not paying the government to hold your money anymore. When you stop celebrating refunds, people attack. What if you owe money? You won't. You calculated it. I'd rather get a refund. False choice. It's forced savings. No, forced incompetence. Why do they attack? Your discipline exposes their excuses. Epictetus, who was born a slave, said, if you want to improve, be content to be thought foolish and stupid. Your broke co-workers' opinions don't compound at 8% annually. Stop using tax refunds as forced savings. If you can't save $250 monthly on your own, you have a discipline problem. A refund isn't helping you. It's hiding your lack of self-control. But I'll spend it if I have it. Then fix that. Set up automatic investment. Make it invisible. Make it impossible to sabotage. Stop celebrating financial incompetence and calling it strategy. Here's your choice. Most people keep celebrating refunds, giving interest-free loans to the government, and losing $46,000 over their lifetime. Few people spend 15 minutes this week, adjust their withholding, and build actual wealth. Which one are you? Comment your refund amount. Refund $X. Then add, I'm adjusting my withholding, or just comment, adjusted. Say it publicly. Accountability starts in the comments. This channel is for people who want wealth, not comfort. Next video, you're not paying off debt, you're funding your own poverty. Marcus Aurelius understood good debt versus bad debt during the Antonine Plague. You're learning it now in 2026. Are you strong enough to admit you've been doing taxes wrong your entire adult life?